Welcome to this explainer. Today, we are looking at something so fundamental you probably haven't even thought about it since you last turned on your kitchen sink. I'm talking about water. But we aren't looking at it as a basic human right today. No, we are diving into the frankly shocking reality that the exact substance making up 60% of your body has quietly evolved into a highly traded billion-dollar asset class on Wall Street. What was once managed pretty quietly by local municipalities is now the prime target for institutional investors, hedge funds, and billionaires. It's a fascinating, complex shift, and I am so incredibly excited to guide you through exactly how and why this takeover is happening.
All right, let's look at our roadmap. We are going to cover the new blue gold, a planet running dry, trading the tap, the Wall Street takeover, and finally we'll wrap up with commodity or human right.
Section 1. The new blue gold. From public utility to asset class.
It is truly wild how our perception of water is drastically shifting in modern finance. It's really no longer just a public utility priced at a fraction of a cent per gallon. It is a strategic, heavily scrutinized asset. Check out this staggering number. 474.46%. That is the astounding return of the Nasdaq Volatile California Water Index from its listing right up to its peak in 2022. And it didn't stop there. It surged again over 120% by mid-2024. This proves that blue gold isn't just a theoretical concept anymore. It's a wildly high-performing asset. Investors recognize that water is a critical, finite resource, and the market is officially pricing it accordingly.
This quote from the luxury playbook really hits the nail on the head regarding the mood on Wall Street. Fund managers who once debated the merits of emerging market bonds now pore over drought maps with the intensity of military strategists. Billionaires and massive institutional funds have quietly pivoted their attention. They are looking at the depletion rates of underground aquifers with the exact same scrutiny they used to reserve for high-growth tech startups.
To put that money into perspective, the global water and wastewater market is projected to hit nearly $370 billion in 2026, and it's expected to expand to over $652 billion by 2034. That is just absolute consistent growth. And why? Because it's anchored in absolute necessity. Water demand doesn't fluctuate with economic cycles the way buying a new TV does, right? People still drink water during recessions. Cities still need water treatment plants. That means your monthly water bill represents an incredibly reliable cash flow for these investors, making this entire asset class largely immune to economic downturns.
Section 2. A planet running dry. The climate catalyst. So, we have to ask the why behind this financial boom. Wall Street isn't just inventing a trend out of thin air here. They're pricing in a severe, completely unavoidable physical reality. Look at this data from the European Central Bank mapping out how surface water scarcity threatens major economic output. The exposure is everywhere. It's not just agriculture, which obviously is highly exposed, but it's also manufacturing, mining, and construction. A 100-year drought scenario threatens up to 38% of agricultural output in the euro area alone. This is what analysts call nature value at risk, and it perfectly illustrates that ecosystem degradation directly disrupts supply chains and threatens financial stability across the board.
The overarching theme we're looking at is a global water bankruptcy. Back in 1947, water availability was over 2,500 cubic meters per person. Today, it has absolutely plummeted to less than 600 cubic meters. That's well below the UN's threshold for water scarcity. In fact, a severe 2026 global drought index recently triggered a massive new surge in blue gold futures trading. By 2030, global demand is projected to exceed supply by a whopping 40%. Meanwhile, droughts are already costing the global economy $307 billion every single year. Plummeting supply, crashing into surging demand, it creates the absolute perfect storm for scarcity-driven valuations.
Section 3. Trading the tap. How water markets work.
Okay, so how exactly do you trade an everyday necessity? It's not exactly a free-for-all. It's a heavily regulated process based on existing legal rights. It basically comes down to 5 steps. First, a rights holder, let's say a farmer, identifies a surplus allocation. Second, they offer that water for lease or sale within a regulated basin. Third, buyers, which could be cities or large industrial users, purchase or lease it. Fourth, regulatory agencies step in to approve or reject the transfer based on environmental rules. And finally, the water is reallocated. The absolutely crucial point here is that water isn't being created or destroyed in these markets. It's literally just being reassigned from one user to another based entirely on financial leverage.
But, as you'd expect, the market is evolving way beyond simple physical leases. Back in 2020, the CME Group launched water futures, which allowed traders to bet on the future price and availability of water in California.
And now, in 2026, we are seeing pilots for tokenized water rights on the blockchain, which is just surreal to think about, right? Converting physical access permits into digital assets. Alongside all this, utilities are transitioning to real-time scarcity pricing, basically surge pricing, where water dynamically gets way more expensive during drought periods. These financial tools allow institutions to manage water price risk just like they would with gold or oil.
Section 4. The Wall Street Takeover. Institutional capital flows.
With these new trading mechanisms all set up, we're seeing a massive influx of private capital, an M&A activity that's completely reshaping who actually owns our water infrastructure. Take a look at this number, $26 billion. That represents the disclosed value of global water sector M&A transactions in the year 2025 alone. After a few years of decline, capital is just flooding back into the space. We are seeing institutional investors, heavily backed by private equity, quietly outbidding local municipalities for aging reservoir rights in essential infrastructure. They're doing this because those long-term cash flows are just that reliable.
Zooming out to the broader trend, the market rebounded incredibly aggressively from $10.6 billion in 2024 to that $26 billion mark in 2025, across 436 completed deals. And this rebound wasn't just huge mega deals either. It was heavily focused on mid-market and technology acquisitions. Companies are buying up advanced water treatment technologies and digital capabilities, paying huge premium valuations to build platforms capable of managing this increasingly scarce resource.
And listen, this isn't just a passing fad. According to the Currents of Capital 2026 report, an unbelievable 96% of institutional decision-makers intend to maintain or increase their water allocations this year. That is near unanimous conviction. The world's most sophisticated allocators view water as a permanent portfolio necessity now. They see it as a rock-solid hedge against climate instability that offers long-term demand certainty unmatched by almost any other asset class out there.
Section 5. Commodity or human right. The ethical collision.
Now, we really can't explain this financial shift without looking at the deep political and ethical tensions it creates. Market efficiency is coming into a direct, head-on collision course with human survival. Let's impartially map out the outcomes of these markets. Proponents argue that trading reallocates supply super efficiently to higher-value uses, which rewards efficient farmers and secures supply for wealthy cities and institutional investors. However, critics point out that this market framework creates very clear losers: small-scale farmers without market leverage, rural communities that depend on historical allocations, and fragile ecosystems that literally don't have a legal market value to bid for their own survival. Basically, when prices spike, those who can't pay are simply priced out.
And this dynamic has sparked a massive global backlash. In the U.S., Senator Elizabeth Warren introduced the Future of Water Act, specifically to prohibit the trading of water in commodity futures contracts, aiming to completely stop Wall Street speculation. Internationally, UN experts have strongly condemned treating water like gold or oil. We can look over to Australia, which has a highly developed water market, where prices recently hit 2,700 Australian dollars per megalitre. That effectively priced small and medium farmers entirely out of agriculture. On top of that, human rights advocates are raising major concerns that international water forums are increasingly being influenced by the exact same corporate interests looking to privatize the resource.
So, as we wrap up this explainer, we're left staring down a pretty intense reality. As we move deeper into a resource-constrained world, balancing economic optimization with fundamental human life is going to be our most defining challenge. It all boils down to this one question: should the water flowing from your tap be allocated by strict legal rights, by free market mechanisms, or fundamentally by public need? Thank you so much for joining me today, and I'll see you next time.